Good Thursday morning, Market Chameleons, and everyone join us for the first time. Thanks for coming into the Market Chameleon pre-market show with myself, Will McBride, and the main man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for everyone's viewing.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Perfect.
And
so some big Facebook earnings yesterday, huh?
Yeah, and you were talking about it. You're mentioning that they beat earnings, missed on revenues.
Yeah. Well, I don't know if they. I have to look at the earnings, but there were some very positive comments about, the fact that they were maybe cutting back on how much they were spending on the Meta platform, Oculus, trying to get revenues under control and their spending, which I think is what a lot of people like. So the conference call, I think, invigorated a lot of people's opinions of the stock. But
yeah, and it's definitely up right now in the pre-market hours. We'll take a look at it. We'll see what it's done since last earnings report, how it's been trading, what it's doing in the morning, and we were discussing it. Before. There are a lot of tech companies that sometimes they reach a maturity level, and they have to look for a new source of get into a new high growth business. And we were discussing Microsoft for a long time, or even. And I think Microsoft does have a monopoly on desktop computers. But even with that, they kind of slowed down. And it's not until they went into the cloud that they started to, again, accelerate in their earnings.
Yeah, for sure.
So what we'll do today is, and if you guys are joining us for the first time, if you have questions, put them in a live chat on YouTube. Will's monitoring them. He'll read it back to me. If you want to come on and ask a question directly, we put out a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get to Zoom, click on raise your hand. And we'll put you on live. You don't have to turn on your video camera, but you could ask your question directly. And it could be, if you Market Chameleon tools, data analytics, strategies, you're welcome to come and ask those questions. And I think everybody will benefit from that. So while we're waiting for any questions to queue up, what I'll do is take a look at the pre-market report, see what's moving and trading in the pre-market hours. I'll navigate to Facebook. We'll take a look at, what the options we're expecting today's stock range to be after earnings, what it's doing. And then if we do get questions, we'll go to those. Sound good?
Perfect.
So right now we're on the pre-market report. These, again, stocks trading in pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 162 stocks made our percentage gainers list, 48 on the decliners list. So right now, from that perspective, we're looking at a stronger or bullish bias at the open. I'm going to filter this list down to S&P 500 stocks to see what's going on there. So this will take out any ETFs, closed-end funds, leveraged products, units, rights, all that stuff. Let's take those out just to focus on S&P 500 stocks. To do that, I'm going to use the filters here above. This one in ETF, I'm going to drop it down, select SPY. SPY is the S&P 500 ETF. By selecting it, this list got filtered out for stocks that are holdings in SPY. And these are the S&P 500 constituents. Here we see 42 stocks made our percentage gainers list, 9 on the decliners. So right now we are looking like we're setting up for more bullish bias at the open. Up here, Facebook made the top of the list, up 14.4% right now in pre-market hours. And we know it was earnings. So if you come down here, just a reminder, these alerts, when you see a little E there, that means that the company reported earnings either yesterday after the market closed or today before the market opened, and that this stock could be reacting to that news right now. The little N, that means there's headline news that we're picking up. If you hover over it, you're going to get the headline there. So you could read it. If you go down, click on the headline, it'll take you to the news story. Okay. So we could see here, these top movers all had earnings, right? So Facebook, NOW, Qualcomm, LUV, Eli Lilly, PayPal all had earnings. These are stocks moving higher today. On the downside, ALGN, SWK, as you can see here, all these also had earnings. There are no questions specifically on this pre-market report. Well, I'll just move on to Facebook then.
Perfect.
So I'm going to go to the Facebook page. We see here, closed yesterday around 174.95, trading close to 200 right now, up 14.2%. And over here, we have a menu where we could take a look at different analysis of Facebook. So under earnings, I'm going to hit this one, implied moves, and this will just give us a visual. I'm going to scroll down here, and these bars here, these are historical earnings and today's. These bars are showing us what the expected range was according to the option straddle for Facebook. So when you're buying a straddle, you're buying a call, buying a put, the stock has to move in either direction to by big enough percentage to cover the cost of both the call and the put. So you could see here, from zero, it could go up or down. So I'm hovering over here. Yesterday, the straddle was implying a move of 13.8%. Today in the pre-market, it looks like it got as high as 18.4%. So above it. And these are the historicals. So we see previously the stock was down 26.4%. It was anticipating a move of 7.5, down 26.4%. This time around, it's breaking through that range, but to the upside. Let me take a look at, since we discussed its earnings and revenue. So here under earnings estimates versus actual, here they just reported. If you click on this press release over here, it'll take you to the story. So by clicking it, it'll take you to the press release from Facebook or Meta now, and you could kind of read it. These are what they're communicating about their earnings. I'm going to come back here and really quickly, just as a summary, we see this was the estimated earnings. This was what they reported. So here, 16% above the estimate. I'm sorry, 16 cents above the estimate. Their revenue, this was the actual versus the estimate. So that was down. And they also, it looks like up here, we picked up that they issued some guidance. This is for the second quarter. They're saying that revenue is going to be between 28 to 30 billion. And if we compare that to same quarter from the previous year, right, that looks like it's kind of in line, no growth, right? So just basically flat year over year based on their guidance so far. So that's kind of like from the top level, looking at the numbers. But you did say, well, they had some other comments. Well,
oh, there's a lot of chat. Sorry, I'm chatting.
Okay.
Well, I just, as far as the Facebook goes, I think it's the management, and I forget the executive who was talking, and this is all, being repeated back on CNBC by, the analysts, but they were very impressed with how he was looking at revenue. I mean, it's really all these big tech companies have become mature businesses, right? So they now have to decide how to work within their businesses to drive revenue, basically. Right. And they felt he had a real good handle on their cost of the Oculus and maybe pulling it in and actually trying to find revenue earlier and not just spend money, wildly on projects. He actually said they were cutting a bunch of projects. So,
okay. So let's take a look at their post earnings strips. So we did see that the last earnings, the day after reporting earnings, they were down 26%. And I'm going to come down here and just show you guys. This is the last earnings, February 2nd. Right? They reported they were down 26%. From that day, from the close, it looks like it closed at 237. You see that it's gone down an additional 26% after that. So pretty significant drop even after the day, so that's not including this day, 26.4. That's adding to the losses, another 26.4% post earnings. And you could see here, the red and the green, that's like the largest we've seen in the last 12 quarters. So pretty significant move already, pricing in. That's why we might even be seeing such a big bounce already, because there was a lot of negativity already being priced into heading into this earnings. Maybe some of it had to do with also what happened with Netflix.
And they actually did gain subscribers too. Someone just pointed that out.
Yeah, so it wasn't all bad. It wasn't all bad, but I think the fears now, are they really slowing? Are they slowing down and are they maturing? Right? It's a very big company at this point. They do have a lot of subscribers. Are they maturing? It's going to be slow going forward. But it wasn't bad. I don't think it was bad. They're a very profitable company.
I mean, listen, they're on almost everyone's phone in the world, right? It's hard. You really got to figure out a new way to grow, right? How are you going to grow Instagram? How are you going to grow the other features that are going to hopefully drive revenue growth? And then everything on the iPhone has changed the way they can market to people, right? Which
I think that's a big thing too. A big concern is their business model. It's all ad revenue generated. And
if the economy does slow down and this inflation, this rise in interest rate environment because of get inflation under control, does that lead to a recession? The first thing businesses cut during a recession, right, is advertising. So
so they might be very sensitive to that. That and also just the change in regulation changes, even other companies are making, not allowing you to track, right, and get that information that you need for how they do it is very targeted, right? So they're in the business of targeted advertising. So that requires a lot of information, and we don't know what's going to happen. What's going on with, are they recording your conversations, your voice? Are they tracking your location at all the time? Do they need all that stuff? And what are the new laws going forward? How are they going to get impacted? So there is, and I think they're all facing more pressure now from competition. You got like TikTok out there and other, Twitter might be changing the way they're doing it, might become a bigger competitor to Facebook. So you do, I think, have a lot of stuff going on there. I'm going to show you guys though another thing.
We did have a question about the Facebook drift. Can you see where it goes 2 weeks out, 3 weeks out? How's it tend to drift after earnings? Rob is asking.
Yes. So let's take a look at the stock patterns. So this here, it's looking at the last 12 quarters to see how Facebook tended to behave, before earnings, after, during, and after. I see here, we're right now, this is day of earnings. So this is right now we're at the opening gap. So I see, 55% of the time it tended to open higher after earnings, 36% lower. I think there's some unchanged there. After the open, this is how the stock tended to behave. From the open to the high of the day, on average, it moved up 1.2%. From the open to the low of that day, on average, it moved down 3.4%. So here we see, looks to me like the magnitude of the down moves exceeded the magnitude of the up moves, by a pretty big ratio, more than 2 to 1, right? Almost three to 1, 3 times as much to the downside than to the upside. The drift from the open to the close, you could see here 91% of the time from the opening to the close of the day, it drifted lower, 9% of the time higher, on average lost 2%. The volatility up or down intraday from open to close, on average 2.3%. So you could see here about, the volatility after the opening, 2.3%, high I see 4.5%, which was down here, down 4.5%. Following earnings, so wherever it closes today, how does it tend to behave afterwards? So we could see here, day after still tended to be weak, 91% of the time. It was lower the next day as well, 9% of the time higher, for an average loss of 1%. So really didn't start to improve until about 2 weeks out. So that's how coming out of earnings, that's how it tended to behave. One thing I wanted to show was, another thing I wanted to show you guys is, and this comes up a lot for some reason, people, you probably heard the term gamma squeeze, right? Well,
yep.
So the gamma squeeze, and I'll show you kind of what the idea is behind here, but I'm gonna look, it's using the open interest, and under the open interest, we could see how much open interest is there is by strike, right? So I'm going to do this by strike, and these are cumulative across all expirations. If you want to pick a particular expiration, you could just drop down here and do it, but this adds up all the expirations, puts per strike, calls per strike, aggregates them and shows it here. And what is the idea behind it, at least, some of the people who communicated to me, is the following. Look at strikes, and if it has a lot of puts on the strike, that would indicate that around those strikes, we will see a lot of volatility. Because people, when they trade puts, tend to buy protection. If you see a lot of calls, big percentage of calls on a strike, that would indicate that there's a more likely chance that it will slow down and less volatility, because a lot of people use calls to buy right and sell the calls. So that is the idea behind this. Okay, that doesn't necessarily mean that happens, but that is the idea, to look at it, and if you identify that there are a lot of puts, maybe those are strikes that will see more volatility. If you see a lot
and you also have to be aware of the volatility, right? And actually the product, like if it's a biotech, let's say, and there are a lot of calls and the vol's going up, it's, you got to be aware of all the surroundings.
So it could vary by product and by situation and so forth. But that's kind of on the top level, the idea, are there a lot? So here we could see kind of where Facebook was around the 180, 170. If I'm just hovering over it, that around there, and we did see a lot of volatility, we could see that the puts are definitely, are more dominant than the calls, right? By big ratio, 90% of the options or 90% of the open interest are in the puts. Right now, we're around the 200 level. So here it kind of evens out. So at the 200, I would say, to me, it looks, well, there are more calls than puts, a little bit more even as you go up. So if you're looking at strikes potentially where you could slow down or speed up in volatility, that's something people have brought up. People are analyzing this. I don't know exactly every factor that people are, just brought to my attention. People are doing it. It's working out for some people. They don't tell me every single factor that goes into it. But I wanted to mention it because I get a lot of inquiries about it. And it seems to me that some people are communicating that they've seen success. So I just kind of brought it up. I don't really do it that way. I'd probably look anyway, case by case. And like you said, we'll build a story. What's going on with the stock? Is it a biotech? Is this unusual, to see this type of open interest and so forth. But just wanted to kind of mention it today and see if any questions pop up. Or maybe some people have comments. Maybe some people are doing it and would like to come on a show and share.
That's great, D. That was great insight from the Chameleon community. We did have one. We only have 8 minutes left. We did have one question, actually. Kim, who was nice enough to come back. She was on the webinar last night with Raj, which was a great webinar about watch lists. I recommend it for anyone who hasn't developed any insight into the watch lists. He does an amazing job with his watch lists. So a very worthwhile webinar, and that's on our YouTube channel. But Kim had a question last night. I told her to come on this morning. She wanted to find out how you look for dividends going out a month. What are some of the biggest dividends? Things that are increasing their dividends, maybe how to do a dividend screen. I don't know. Listen, it could be a long show. Maybe we do that tomorrow too. But Kim did come back today. So I just wanted to mention that.
Yeah. So maybe a couple ways to do it, quick way. Under stocks. One sec, I gotta move this. So under the stocks, you can just go to the calendar, but then you would have to kind of switch date by date. So if you're under the calendar, you would have to switch to a specific date to see the X dates, right? So these are the symbols, name, the yield, the indicative yield, the amount. So here, this is projected because I see a star next to it. But if you come here, these are if you have a specific date. If you're trying to screen out just like a big master list, you can come under here, stocks and future X dates. And this will produce, and we allow you to download, it looks like. So this will look at all the, so we got 4,800 stocks in here. And as we enter into our database and, announcements for dividends, they'll go into here. So we have a whole process, we have people parsing and looking at for X dividends with press releases, company websites. As they capture them, it goes into our database, saved into this list here. And you could go in here. These are the X dates. So these are the dates they're expected to go X based on the information we have. So the ETFs here, we see a lot of ETFs, and they don't give us the amounts, but they do. A lot of them release schedules. So they'll have a distribution schedule. A lot of times for the entire year, you go to the website, you could find them. So when we find them, we enter them into our database, we make it available here. But you'll see that it will project the amount based on historical dividends. But if you had a watch list, you could just screen by your watch list, right? So then you have, you can narrow it down this way. X date, next 30 days, next 90 days. So we give you a couple filters here, but if you wanted to download it and use it in your spreadsheet because you have other criteria, you can do that as well. So that would be, again, ex-dividend dates that we're picking up from announcements. Okay, so these are somewhere we're getting them either from press release or from the company's website, but somewhere where we're referencing the information that's coming out from, from the source, from the official source.
That's perfect, D. Thanks so much.
Yep. All right. So if there are no questions, well, we're almost up at 9:30.
Let me just I'm flipping around between let me go back, see if Kim that helps. I would like to search for stocks that pay monthly dividends. Is there a way to do that from here?
Yeah, so you could see here there's frequency. And if you download it, you have it in this column here: quarterly, semi-annually, special dividend, monthly. So if you just drop this down and select monthly, now you filtered, this will filter out the list by dividends that are paid monthly. Okay.
Oh.
So you can do it that way.
Awesome job, Dee. You bring it every day. Thank you so much, Kim. I hope that helps. Let me know. You can email us support@MarketChameleon.com if you have any questions. We do have a webinar today. I will put that in the YouTube chat as well. The webinar is with the doctor all the way from, I think he's coming from a gold mine in Africa today. So that should be an exciting show. And that's at 4 p.m. today. And he's going to be talking about put ideas. So that should be a really good show. Dima, great job, my friend.
Awesome. Well, thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Thanks, everyone. Thanks, Dee. Have a great day. We'll see you hopefully on the webinar.